First part of Technical Trading 101. Please, I do kindly ask you to read through this as long as you do agree with the risk associated with the trading. This is not a suggestion on my part for you to buy, sell, or keep any securities you are currently trading. Let's start with the basics. We will look at the technical traders versus the fundamental traders. What is the difference? Technical traders, somebody like me, is looking at the pure charts. So what you see in front of you is a chart. It's a technical chart which represents a market movement. It will show the market strength, where market might be going from now on, and where market used to be. Then you have fundamental traders. Fundamental traders, they're basically looking at the financials of the companies. If you're trading stocks, they're looking at the valuation, balance sheets, and so on and so forth. As a technical traders, we do not bother with that kind of stuff. We are aware of news announcements. On the platform that we are going to be using, there's on the right side, you can see if you're looking at the specific security, you can see the headlines that are coming on, so you can easily follow along. The reason why I'm using a technical trading, because the theory behind technical trading is that all the emotions, all the power of the market, all the financials, and all the stats are already included in the price, and that's where we are looking at the technical traders. These candles on the screen, or this chart basically on the screen, is telling us all that in real time. Types of traders in the markets. Well, you have scalpers. Scalpers are people that are buying penny stocks. They can go in and out multiple times a day. They will stay in a trade for a couple of minutes or a couple of hours, make a profit or loss. You have day traders, people that would stay in a trade for a day or two, sometimes three. There are swing traders. Swing traders would be individuals. They're staying in a trade from 1 day up to 1 or 2 weeks. And then you have long-term traders, which would mostly be stock investors. They are looking at a long-term profit of the security they're trading. Trading platforms. There's a lot of different platforms to trade off. For stocks, the one that we're looking at right now is a TradeView. It has a nice layout of the charts. We can see the volumes. Also, I'm using platforms called MetaTrader 4. This is the platform that I use when I'm trading a Forex. Forex stands for foreign currency exchange. People call it the spot market as well. So how do markets work? You heard these kind of expressions before. There's a bearish market, bullish market. We also have a ranging market. So basically, bearish market is when the sellers are in control and they call themselves bears. So bullish market represents buyers when buyers are in control. And then third, we have a ranging market. More than not, market goes into range. The top price that buyers are willing to pay, and the bottom line would be representing the bottom price where sellers are not willing to sell below that price. Let's take a look at the bearish market. This is the example of the bearish market where the market is dropping. So a bearish market, we would have a market coming down. It would find some certain area or area of support. It will pull back and then continue on selling off. This kind of a chart, when you look at it from the left to the right and the market is falling, this is called a bearish market. In the bearish markets, we have certain support and resistance areas. As the market is falling, it will find a support area. It will pull back, and then it would break through that support area and then make a new low. So we will start from the top, as we call it a high. It will find a low. It will retrace to a lower high because this high is lower than this one. And then once it makes a move through this area, it will make a lower low. This would also represent the market change conditions, where market fell. It does retracement or pullback, which is number one. Then we have a sell-off again, which is number two, finds a lower low, comes back to retest or touch this line again and makes a lower high and then a sell-off. This move would be called 1, 2, 3, and then you have a continuation of the trend. We are always looking from the left to the right of the chart. Bullish market. On the opposite, we have a rally, then we have a pullback, and then another rally. You will many times hear that people say market is rallying. Basically, it's in a bullish move, or buying power is huge. Once again, we are looking at these conditions from left to right. If we see this kind of a condition, market is rising, basically this is a bullish market. Same as bearish market. Bullish market has the same moves, just the opposite. We would have a market rise, we would have a pullback, we will have a break through this area, make a new higher high, higher low, higher high, higher low, and so on. And this is continuation of the bullish trend or bullish market with support resistance. Rally, then we would have a pullback. Market found some kind of a resistance, so nobody wants to pay the higher price than at this point of time. Pulls back, people take profits, and then they add to their positions. Once the market becomes strong again, it will break through this area. It will go and make a new higher high. After this higher high is made, they will start. The investors will start taking profit. So the market will pull back again to this area again to retest this resistance, now turning into support because it was resisting on the way up. Now that we are up, we are coming down. Now it's supporting this price. If the price is right and nobody wants to sell it lower than this price, market will bounce and will continue on. The investors will come in at this area and it will take the market again into a bullish move. A rally, a pullback, which is number one. We have a rally, which is number two. We have a pullback, which is number three, and then again rally. And this is a pattern of 1, 2, 3, where market turns the trend from bearish to bullish, from sellers to buyers. And we have a new trend called a bullish market or bullish trend. Again, we're looking at that from left to right. Ranging market is a bit more difficult to trade. However, it is tradable, and there are certain ways of how to get in and get out this kind of market conditions. In a perfect world, we are always looking for good, nice trending markets, so either bearish or bullish. However, market will sometimes stall, where we can have for a couple of months market going up and down, up and down, up and down, and that represents the ranging market. What can happen is there's two ways to explain this. Basically, market could be falling, or it could be rallying to the top or making a certain price, and then this price, nobody wants to pay higher for that product, and market will fall because traders will start making a profit, and it will rally again, trying to make a better price for it. And if it doesn't they don't get a better price, it will fall again. People will take profit, and so on and so forth, until eventually market breaks either to the upside, or in this case, it will break to the downside. Candlesticks. This is the one part of the lesson that I need you really to understand how this works. Candlesticks originated in Japan almost 100 years before the West developed the bar charts. Bar charts are similar to candles, just they look a little bit different. We will be using only candlesticks on this. They do represent supply and demand, and that could be represented in a day, hours, minutes, seconds, and so on and so forth. It also shows a strong influence by emotions of the traders. Candlesticks or bars, they have four things in common. Each bar or candle has an open value, the close value, the highest value, and the lowest value. So we call it the open, close, high, and low. Every candle also has a body. This is a body of the candle. The bigger the body, the stronger the move. And we also have these little wicks. We will concentrate on 4 different kinds of candles or bars. First kind is going to be an engulfing bar. I will explain what that means. So these are engulfing bars. Second kind, it will be pin bars. So we have a doji bar, and then we're going to have a pin engulfing bar. Doji bar represents a neutral market or indecision. When we see the doji bar, it means indecision in the market, or market is basically stalling. To react on any candle information that's given in front of us, we have to wait for the candle to close. As you can see in this example, we see that first bar was created here. Market was in the uptrend, and we were expecting a continuation of the trend. However, the next day the candle opened, it was just a little line, and then it dropped and gave us a huge sell-off signal. We do not react on any candle until it's fully closed, which means if this is a weekly candle, we have to wait a full week to close and this candle here or the next candle to show up in order for us to interpret what the previous one is telling us that the next session might be. So this is how the trading works. You never react on the candle while it's still alive. If you look at this picture, in the beginning this candle was showing basically nothing, and if you reacted to it thinking that it might continue on into bullish move, well, at the end of the close we have a huge sell-off signal. Pin bars also, like all the other candles, have a close. They have a close, open, low, and high. They have one long wick on one side. This is a bullish pin bar, so the wick is on the bottom. We have a small body and a small wick on the top. They're significant when the market reaches the bottom in order to buy. Also, we have a bearish pin bar, which has a small body, huge wick on the top, and a small wick on the bottom. We also have an open of the bar, close, low, and a high. They're significant when the market reaches the top to give us a signal for sell. In a real life, pin bars would look like something like this. Up until here, market was in sell-off mode. We had a bears in control. Then we get a doji bar, which is indecision. So the market is giving us a signal that market might be turning around. And then we have this beautiful signal, bullish pin bar, that will give us a signal to go long or to buy. And the market just rallies right after that. Bearish pin bar, market was rallying. We get a pin bar on top, and then the market sells off. This bar also has the same values. We have close, open, low, and high. As you can see, the small wick on the bottom, small body, and a long wick on the top. Pin golfing bars. Same as the pin bars, just the pin golfing bar, it has a huge upper body for the bullish move and a long wick. Also has a high, low, open, and close. Just in this case, close and high are the same because the body of the candle closed without a wick on top. It is a very powerful signal when we are looking to buy. When the market is falling and we get this kind of signal, it gives us a nice signal to buy. Bearish pin golfing bar, opposite from the bullish one. We have the market that was rallying. The bar shows up on top. We have a close and a low at the same level because the bar has no wick. We have an open and high, same values and as any other candle, just this one is a powerful sell signal. And then we come to the engulfing bars. Engulfing bars are very powerful signals in the markets. They show us a huge market sentiment either into buy or sell mode. In this case, here we see the market that has been in sell-off mode. The bears are in control. We have a huge bullish engulfing bar. Engulfing means that it's engulfing or taking over, or it's shadowing all the candles behind, at least one in this case. More candles are being shadowed or engulfed, the bigger the move is going to be. Same opposite for bearish. We have the market that was rallying, then we get a bearish engulfing bar that close, that engulfs two bars in this case, and then we are expecting market to be in a sell-off mode. In real life, bearish engulfing bar would look something like this. with the previous candle being engulfed. In the real market conditions, also for engulfing bullish bar, it will look something like this. It will engulf the previous candle and the market rallies right after that. And this is how it will look like. Engulfing bars in the real market conditions would look like something like this. They might have a little bit of wick, or they might close like this. Possibility is it's going to happen more like this than this, but in this case, this engulfing bar, also same as engulfing bar, it's just a combination of the pin, because the pin has a huge wick on the bottom, meaning the market was rejecting the lower prices, and we have a huge positive move to the upside, and also at the same time is engulfing or taking over or shadowing candles on the side, and the market rallies right after that. Engulfing bar in the bearish market, we have in this case 4 candles being shadowed by this huge engulfing bar. So we have a pin bar, which means this wick is very, very long, and then we have a huge sell-off body with a little wick on the bottom. This is interpreted the same as this one, and engulfs all these bars or all these moves before, and then the market just drops in a sell-off mode. And we also have the last pattern that we're going to be looking at. It's called 2 bearish engulfing bar pattern reversal, where we have a last move from the bulls to the upside, and then we have an engulfing bar that engulfs the previous bar of the bullish move into bearish move, and then the market struggles a little bit and then just drops and sells off. For the next session on the part 2, before we can continue on, it would be really good if you can practice and just open one of these charts and try to find these patterns. Try to identify the trends. Try to identify the candles that we were talking about, just the shapes. You don't have to know the names. Slowly it's going to get into your brain, because I'm going to be talking about it a lot. I do appreciate you watching the video. I hope that you liked the video. It would be very nice if you can subscribe to my channel so you can get the updates as soon as I upload a new video. All the videos are going to be available to you to watch or rewatch as long as you want. So thank you for supporting me. Thank you. Stay safe.